How to find a winning deal in today's very competitive market. That's what we're talking about today. If I had $1 for every time I heard someone say, Tony, there are no good deals out there, I can't find any deals. Well, today I'm gonna give you the 5 steps that you need to close on any multifamily deal. 13 units we just placed under contract for one of our coaching clients, one of our mentorship clients. If he can do it, you can do it. 5 things you need. Now, I've learned these 5 things from doing dozens of transactions. I own 257 units today, almost 400 units coming soon. Number 1, you need a deal. Then you need the debt, okay? Then you need the equity. You need a blueprint to force appreciation, because if we can't force appreciation, why are we buying real estate, right? Might as well just stick our money somewhere else. And then you need the confidence to close, okay? So you need these 5 things in this order. First thing you need is you need a deal, okay? So many of you guys struggle and you think you're like, well, what am I gonna do about the management? And well, where am I gonna get the money from? And well, what about zoning? And what about you don't even have a deal yet. You gotta get a deal first. Then we worry about the debt. We go get financing, quotes. If banks love it and wanna finance it, you have a great deal. If no one wants to finance it, you have a bad deal. Then the equity follows the deal, either your own capital, like what I do, or you bring in a partner or 2, you bring in a partner or 3, but people try to get equity, you don't even have a deal. You gotta get a deal first. If you come to me, you're like, Tony, or Tony, you should invest with me into multifamily, I'm gonna say, okay, I like multifamily, what deal? Well, I don't have a deal yet. Well, okay, what am I investing into? This like arbitrary thing, right? So you gotta get a deal. Equity follows the deal. There are far less deals out there than there is money. Money's infinite. There's no shortage of good money out there looking for a place to call home if you can find a deal. Then you need a blueprint. What are you gonna actually do with the deal after you get it? Because anyone can buy a deal. You've heard me say this before probably. Anyone can buy a deal, but it takes a true operator, takes a true professional operator. When I say manager, I don't mean I'm dealing with the tenants, termites, and the toilets, but I'm managing the managers who deal with the tenants, termites, and toilets. You gotta know how to force value, and most importantly, you gotta have confidence. If you don't have confidence, you'll never close on a deal, right? So let's walk through why this deal is a home run, okay? And how you can find things like this if you know what to look for. So like I said, 13 units. So let's talk, and I can't give you specifics yet because it hasn't closed yet, but let me know, would you like to see a full walkthrough of this property after our client closes? Let us know. So number 1, deal. Why do I like the deal? We have freaking $400 to $500 in rent growth on this deal. Organically, we've already done our due diligence. This does not require heavy upgrades. This does not require heavy CapEx. Listen to me. This is what's called the light value add strategy. LEVIS. I just made that up. I didn't make up the phraseology, but the acronym I made up. I don't know if I like it or not. Light value add strategy. I'm not a fix and flipper. I don't have time. I have 3 companies that I run, and I do YouTube to help you for free. This is what I coach my clients on. This is what I'm teaching you to do. I want a light value add strategy. I've got 13 units. Freaking awesome, but I don't want to go manage, and I don't want to go deal with construction. I don't want to deal with heavy unit turns. And when you do heavy unit turns, guess what? You have vacancy, right? I don't want to deal with construction loans. So I look for things like this. This has been owned for multi-generation. So we're talking 13 units has been owned for 30 plus years. Come on, folks. What does that tell you? What does that tell you? That means these rents are artificially low. Why? Because they have no debt on the property. When they have no debt, they don't have to worry about mortgage payments and interest. They want to keep the rents low to keep the heads in the beds and not deal with anything. Great, huge opportunity. If you look back on my channel, I bought 56 units that last sold exactly 30 years ago. Same situation, very low rents. What does this do? So $400 to $500 rents. Let's just call it right in the middle, 450. We do not need major CapEx upgrades. We do not need major unit upgrades to achieve this. If you watch back on some of my previous videos, go check those out. Number of units times rent growth equals new NOI. And you should know by now, if not, go watch my other videos. NOI divided by cap rate equals my value. Okay, so let's show you what the $400 rent growth would do. So pull out your calculator, do this with me. 400 multiplied by 13 units equals $5,200 in new NOI. Remember, everything's done on an annual basis, right? So 5,200, that's just new monthly NOI. That's new cash flow. Great, great. But remember, multifamily is a game of large paydays. Cash flow is great, but we want to work towards a large payday. 5,200 bucks multiplied by 12. That's 62,400 in new NOI. Fantastic. What do we say? NOI divided by cap rate equals my valuation. So 62,000 divided by, let's call it a 7% cap rate for this area. Our client's going to make $891,428 on this deal by just bringing rents to market value. That's it. Nothing else. We're not talking about lowering expenses. We're not talking about increasing collections. We're not talking about all the ancillary things that we do to force NOI in a deal. That is it. Just by increasing rents, not insidiously, not forcing people, not pricing people out to the market. This is what everybody else in the neighborhood is charging. This deal was not charging it because, like I said, they were owned by longtime owners. So this is what you are looking for. I've been in this position. Is someone happy if they go from $500 to $900 in rent? No, of course not, because they know they're getting the deal of a lifetime. But then they look at what else is out there and they say, okay, I get it. I see this. Yes, this is still pretty fair. This is still fair to wherever else I would go. If I'm gonna leave here and go down the street, I'm gonna get the same exact rent price, but now I'm gonna have to move and do all those things. So don't think of this as like price gouging. It is truly just correcting what should have been done a long time ago. That's the deal. That's why I love the deal. This is what you're looking for, okay? So once you got the deal, guess what? We went out and got debt quotes. We got quotes from 3 different lenders. And guess what they all said? I love the deal. Remember, they're gonna look at the deal first. They're not gonna look at you. They're gonna look at you a little bit, but they're not like, what's your debt to income ratio? What's your credit score? Let's finance the deal based on your credit score. No, they say, man, you're gonna make, they see this too, because they ask for a business plan projection, which we help our students provide. You have to know how to prepare like a nice business projection, what they call a pro forma projection. But we went out and got 3 debt quotes. We got a winning debt quote, I think at 6.25% interest rate, 10-year term. Dude, let's lock it up. Boom. So now we've got our deal. Got our debt. Always shop multiple places. Don't just go with one person. You want competition, right? You want the lenders to be like, I love this. We want to go with this. Oh, what'd you get at number 2? Okay, they gave you a 6%. You know what? We can match that 6%. I've done that several times. So you got to shop the debt, but you got to know the right lenders to go with the right deal. Not every lender loves a value add deal like this. So you got to know where to go. Then we go to equity. Okay, cool. We've got a deal. We've got debt. How are we funding the deal? Now, he's a high net worth individual. He followed the model that I followed. Build a business, create success, create earned income. Earned income. Use your earned income to invest in passive income producing assets. What do I mean by passive income? Do I mean sitting on a beach all day sipping Mai Tais? No, but he's not directly trading his time for money here. When we make earned income in your job, your career, your business, you trade time for money, right? You invest into real estate, you're now trading money for more money. That is the game. So that's what he did. But let's say you found this and you want to bring in a partner too. It's a lot easier to bring a partner on board when you're like, hey, look, we're getting $400 in rent growth. When you do the math I just did up there, would you agree? Of course, you have something tangible. You have something to articulate to. You have something to get people excited about. Just like I'm getting excited sharing this with you, you have something to get excited with people and show them, right? So that's the play. You're either bringing in your own money, which is what I like to do, but if you don't have enough money on your own, that's okay. You can bring in other people's money with you, but you gotta have a deal, you gotta have debt, you gotta have something to show them what they're investing into, or else they could just go do it on their own, right? You have to, usually very high net worth people, they have money, but they don't have time. So if you don't have all the money, but you have time and you can learn what I'm teaching you here and go out and do this, Guess what? Money follows attention and this type of formula. Like wealthy people want to learn how to get their money to bring little money babies back to them, which is what you want to do too. So you don't have to have all the equity on your own, but you have to have a deal, you have to have debt. We want to take our bust our butt money, our earned income, convert it into passive income producing assets that also throw off what? Major tax benefits. We'll get to that in a second here. Last two steps. I said you need a blueprint. What I just discussed there is the light value add strategy. And I'm not going to be able to get into this because this is what our client invested into to learn what we did, but we broke down a full strategy of the bird strategy. Buy it right, renovate it. What do we have to do to get the rents up? Once he closes, our client's going to fly out to Michigan. We're going to do an in-person coaching day to go over the management of it. So he's going to be able to manage it. He's from the West Coast, man. He doesn't even live here. He's going to manage it remotely. It's stupidly simple and easy. You got to learn this. This is what we teach our clients. So how to do that remotely, how to do it effectively to where it only takes a couple hours out of their schedule each and every week. But this is where all the money is made in the management. Then we're going to work towards a refinance in 12 to 24 months. When you create $800,000 in equity, you're going to be able to pull. I'm going to tell you this deal is, I want to be private to, the deal because it hasn't closed yet. It's not $2 million. It's far less than that. So he's definitely going to be in a great equity position, be able to refinance out his money so then he can go repeat the process and do it again. When you buy a deal right, and let's say I buy a deal for 1.2 million, and then in 12 to 24 months, running this value add strategy that we've done, it's worth $2 million. I can go back to that bank. That's what we teach our clients to do. Refinance out some of that capital, let's say $500,000. Well, guess what? This $500,000 is tax-free. Why is it tax-free? Because it's debt, right? They're going to say, wow, you paid 1.2 million. It's worth 2 million. Let's give you a loan based on the new purchase price, and we'll let you refinance out, take out the difference between what you did owe and what the new property appraised at. It's very powerful. So then when he gets this 500,000, guess what he's going to go do? He's going to go buy a 20 unit deal with it. Something like that. That's the BRRRR strategy. Remember, it begins with finding the right deal. If the deal didn't have this potential of upside, you can't do this strategy. Getting the right debt on it, because if the lender won't allow you to do this, or the terms are too bad, or the interest rates are too high, or they're locking you up for 5 years or 10 years, some loans do that. Listen to me, some loans will say you cannot modify this loan for 10 years. You can't do this BRRRR strategy on that, right? Or you can modify with massive penalty to where it wouldn't even be worth it. So you have to get the right debt, then you bring in the equity, get the right equity structure, then you run the plan, you run the strategy. This part, like when we sit with him face to face for, that's pretty good, I dropped that, for 4 hours and map out the management, that is where the money is made. So I'm giving you the high level overview here, but it starts with finding the right deal. Last step, you gotta have the confidence. All this is fine and dandy, but if you don't have the confidence to actually close on the deal, I've seen clients get all of this, get to the very end, freak out, and not be able to move forward. Not our clients, but I've seen other investors, I should say. Investors do that. What we help our clients with is it's just a second set of eyes, right? I've been through it. Trust me, I've signed on millions of dollars of debt, of recourse debt. So that means if the deal goes south, I'm personally liable. So I'm not just this YouTube guy out here talking about things. I bought a couple duplexes. Like, dude, I live and breathe this. I know what to look for. So you need someone. Going back in time, if I look back in time on my first couple deals, man, I would have loved to have had someone to help me with the confidence because I was scared bejeepers. I was scared out of my mind. I never smiled at the closing table when we acquired a deal. I smiled when I refinanced. That's when you know it all paid off. Confidence is going to be your biggest killer. How do I give you confidence? I don't know, right? Working with a great mentor, studying what you're doing right now is really good, studying and learning. But when it comes time to sign on that dotted line, and you have those 70 pieces of papers in front of you that you have to sign and do all these things, it takes confidence, or else you will get this far and you will back away and you will not close on the deal. And guess what return on investment you get for a deal you don't close on? 0%. And you're probably gonna piss off a lot of people along the way, right? For tying up a deal. That's what's called a retrader, someone who can't close, right? Brokers tell people, oh, you've seen this guy, you've seen this girl? Yeah, they don't close on deals. You gotta have confidence to close on a deal. Confidence in yourself, confidence in your blueprint, confidence in the debt, and it really helps to have a mentor. So this is what we do for our clients. If you wanna work with us one-on-one to learn how to do this, click the link in the description. I'm on a mission to help 1,000 people buy their first deal. You can take everything I just gave you here and you can go do it yourself. You don't need anyone to help you. But if you lack confidence, just like I did in the very beginning, I didn't know this process. I had to learn it the hard way. That's where mentorship can really come in. If you want to see us after he closes do an actual property tour and get a little bit more in the trenches with it, let me know, comment below. As always, I have to respect privacy. The deal hasn't closed yet, so I can't give out too many specifics. Thank you so much for being here. If you enjoyed this content, I take time out of my day of running my companies to come and create this for you. Just let me know. Drop a meaningful comment in the comment section. Share this with somebody who wants to get in this game. And as always, thank you so much for being here. Until next time, we'll talk soon. Thanks.